Hello, folks. Welcome to State of the Market. This is David Russell, Global Head of Market Strategy at TradeStation. It's great to be with everyone. Today is Monday, October 6th, 2025. And today our title is Pharma Comes to Life. Now, we have technology leading, but the healthcare move was interesting last week, and we'll be touching on that. Tech is leading today with some other news that popped up, but there's lots of things to cover, and we're going to be doing that. So let me just get up also standardized returns next. And just show you some of those. We talk about ETFs on this webinar. We mostly talk about the indexes and sectors. However, in this market, the indexes and sectors in some ways are a little bit less interesting because there's been low volatility, and this is what we call a stock picker's market. And in a stock picker's market, you often see lower volatility. Here's a little diagram we use to show this to people. And like I said, less correlation, stock picking. The market goes through these cycles. And this is a period over here when individual stocks are kind of the area where we often see more outperformance. So we just quickly show these things. You also, now, if you go to tradestation.com, you scroll down the page, you can see this article, Stock Set Records as Pharma Comes to Life. And so a lot of the points we're going to be covering are in this blog post. Now, I think overall, when we look at the overall, kind of situation, what we see is essentially um, a kind of very positive environment because of a bunch of fears that are not playing out, kind of classic kind of wall of worry environment. Now, the thing I'll say first off the bat that was interesting to me, if we look over here, I want to just quickly mention healthcare before I get to the other stuff because I think it was interesting and it's kind of symptomatic of this market. This is actually my another tab that basically shows us daily changes, but it's a year-to-date change here, and you can see that the XLV is now up 4.8% on the year, and all of that move came last week when it was up 6%. So it's interesting is healthcare was one of the worst performers on the year and had a big surge into the green XLV last week. And the reason is because basically there was an agreement between the White House and Pfizer, and now there's an overall expectation that more good news will be coming in the sector in terms of things like drug pricing and a lot of those sort of things. It's important to realize in this market we've kind of seen this pattern of you know, um, fear turning into optimism. We saw it with the semiconductors and we've seen it with Apple. And it's kind of like, the White House goes from naughty to nice. And once they start getting nice, people look for more nice things to happen. So I think what we saw in healthcare now does kind of change the overall structure or the overall, sentiment and backdrop in this sector. And that's something that is, I think, important we want to stick with. Although today there is a focus on technology, so we're definitely not going to look past that. I would say today that this is what we used to call Merger Monday. I'm going to just quickly show some of these things now. AMD had this huge move because of the fact that OpenAI is taking position in it and kind of looking for a strategic kind of collaboration with AMD. And we had talked about the potential for people to look at vertical spreads in AMD. We had looked at something like I think the 180 to 190 on Thursday in our market trends, and that spread will be very much filled. But people might want to think about, does it kind of tough test down toward 200, and then maybe it becomes something where people can think about things like credit spreads. When things have made giant moves, that's often when people want to look to sell options, and when things are in a spot where they have a potential to begin a move is when people want to think about buying options. It's just a way to think about things. So after things make a move like this, spending money, on another move, which is what you're doing when you buy options, when you pay money for options and you have a debit, that's something that might not make sense. But by selling options, what a person can potentially do is look to harvest premium from the move that has already happened, so to speak. So I want to just mention that because we had talked about that vertical spread on Thursday in market trends. Now, Comerica CMA Regional Bank got acquired by Fifth Third. Now, CRML, this is some kind of rare earth company called Critical Metals. That there was a conflicting press reports about the White House wanting to take a stake in this. But last week we had other ones. Apparently, the White House has denied it. I mean, you can look up the exact details, but I want to just point out that we're in a market now where these kind of small companies have been active. Remember, we saw this in a company like MP Materials back over in July. This was because of the White House getting active. And last week, USAR, a rare earth company, had a White House involvement, some kind of stake, I believe. You can check the details of these. Some of these are kind of complicated things, but essentially we're talking about, um, you know, this is what we call strategic actions. One of the things we talk about are the seven catalysts of stock movements, and when it's someone buying a stake or a company getting acquired outright, or people kind of teaming up to do stuff when one takes a stake in another, like we see with AMD and Open AI, or we saw with Nvidia going after Intel. This sort of stuff of stirring the pot, we really haven't seen it since the financial crisis until the last 6 months or so, 3 to 4 months. And I think it's a new element in this market, and it's a little bit of something that isn't great for the mega caps because no one can move the mega caps, but you can move small companies based on strategic actions. And I think I just want to point that out because we're seeing that. Another one last week, LAC Lithium Company. So these sort of M&A merger things continue to kind of percolate through, and it kind of puts an environment in the market where optimism kind of gets rewarded, and there's a continued sort of sense of there's buyers in the market, there's activity, there's things happening. Want to point that out. Now, cryptocurrency have continued higher, but I did want to just mention GLXY, this company, Galaxy Digital. They had an IPO. Well, I don't think it was an IPO, but they're breaking out here potentially. GLXY, they're done by this guy, Mike Novogratz. I can't remember. Sorry, I should know his name. But anyway, look at these levels going back on this stock. So this at one point had some kind of SPAC related thing here. But the key thing is, look at this level now we have versus November of 2021. So I want to point that out. This is a weekly potential breakout at a time that crypto is moving higher. They had some news today, but this is also one of these stocks that, you know, doesn't get huge attention, but it gets a lot of options. And crypto has been a strong theme. We've seen strength in the different cryptocurrencies. We talked about Coinbase a few weeks ago, and it's kind of come off this. We talked about it on this pullback, and it's come off that kind of 300 level. Anyway, I want to just kind of point out GLXY, kind of interesting. And that was, grabbing some of my attention. Now, Tesla also today has a report of a new car model potentially coming out. Again, this kind of market where there's kind of buzz and talk and things like that, but that is the expectation now in Tesla. I think it's interesting. And so all these things are kind of creating that environment where we just see kind of a continued sort of news, seems to be consistently breaking in a positive sort of direction. I think another thing that is, I was look, overall, I see two major trends right now in the market that I think is a kind of, as someone who watches the market and from my perspective is a kind of, journalist and strategist, I look at this overall. I see two very clear trends that are to a certain extent in effect. The first one is the move in AI. I think is obviously undeniable. We know that, and it's moving from one area to another. At one point it was the software companies. In some ways, some of the early movers were things like ServiceNow and stuff like that. They rallied. Now those are kind of fading. A lot of obviously all kinds of different semiconductors, but now we're seeing all these other things like the data storage companies. Like this incredible move continues in Micron, another upgrade today. These sort of things kind of just continue to hammer away at different parts of the market. So I would just say this ongoing AI is obviously just rotating areas of strength. Now, the one thing that's interesting to me, I talked about last week, but Microsoft here, has not backed down. And this, we had talked about a potential breakout of this weekly high from back the beginning of October, and we're getting it today. So I want to just come point this out here. Microsoft looks to me like Goldman Sachs kind of did back here when it had this breakout. It kind of had this breakout and it just grounds sideways and then it starts kind of accelerating. So I just want to, it did have a deeper pullback, but I think the thing here is that now we're back above the 50-day. We're above the 21-day exponential. It's really, you could probably put a Bollinger bandwidth on this chart and see that it's had a very tight kind of squeeze. And I've seen many stocks do this and then just puke to the downside. And Microsoft, if it wanted to break to the downside, has had every chance to do it. So I think right now, today, the one that's kind of getting some attention after months of being just kind of, relatively sedate, today is Microsoft. And we had talked about that last week. We talked about AMD last week. Um, Remember, we do a webinar also on Thursday called Market Trends. You can also find that on our YouTube channel. Um, the other major theme that just continues is weakness in the dollar. And I do think that I'm going to get to this, but today there's some interesting things about the dollar today that I'm going to cover when I go through index by index and look at the dollar index. But I think this shift away from US assets is just undeniable. and for multiple reasons. But the key thing is it is a very, I think that's a very substantive shift. And then another new trend that I said, this is something I'm not as sure of, but it seems to be emerging, is the potential emerging strength in healthcare after what has literally just been, a year of weakness. Um, there's I think some evidence on the weekly chart now that healthcare might be entering kind of a new cycle. So there's a lot of other things happening, but I did want to kind of mention that because I kind of view it as two things that are really kind of pretty well confirmed trend, which is the AI trend and the movement away from the U.S. dollar. Those are two pretty substantive trends, and then the healthcare trend is a kind of emerging trend that these are themes that maybe are going to extend themselves. So let's look at the S&P 500 overall. If you look at our article here, down here in charting the market, we talk about a few key things. And to me, what's kind of interesting is the advanced decline line hit a new 52-week high. And then also last week we talked about this, but we saw that 27 members of the S&P 500 were up double digits, and not a single company fell 9%. The biggest decliner was Valero Energy, down 8.7%, and then there were 27 companies up over 10%. And you can see our table here. You can see. So this is also a kind of sign of strength. It's not just the fact that it was about 305 companies up versus the remainder. 305 of the 500 were up, but the ones that were down much less. So I want to just kind of point that out. This is also kind of multiple signs of breadth that we see across the S&P. What's also interesting is I'm not going to show it here, but the National Association of Active Investment Managers, NAAIM, they have a study that shows the exposure of active investment managers to the overall market. It's like the American Association of Individual Investors, and the name number that the NAAIM number was the least bullish or the least exposed to stocks since the end of July. So again, all of these are pointing to a wall of worry in the market with people who remain underexposed to stocks, and the news just keeps breaking in a good direction. It's a classic wall of worry. And so I think what's interesting about that is today on CNBC, there's an article. Paul Tudor Jones said that the market might actually, kind of have a blow off top. And I think it's interesting because in many ways we've talked about, and we're going to get to the verticality and the increasing steepness on the S&P when we get to the weekly chart of the S&P. But there are signs of that. We have been kind of talking about the fact that this is an environment where the pullbacks are getting, you know, shallower and shallower, and it does have some of those attributes, especially going into the fourth quarter, a seasonally strong time. It does have the attributes here of kind of accelerating. Tom Lee at Fundstrat last week said the S&P he thought was going to end the year above 7,000. That's the S&P weekly chart we have here. Now, the one thing I'll just say, I do believe, and this is the bond ETF, I do believe that the biggest risk here is in the yields. The 10-year here. I mean, you look at this. Um, on a weekly chart. This is the price of the 10 of the third of the basically 25-year bonds, and you know, there's no evidence of these really having turned up. If you look at this, we do see consistently lower highs. Look on the chart of the 10-year here as well. So to my view, this is the biggest risk. But again, it's not a huge risk right away. It has to really kind of run higher a lot before people really start worry about it. So I want to point out it does remain a risk, but it's not menacing yet. And then I think countering that risk at the long end of the yield curve is the fact that the dollar index does seem to have continued downward pressure, which is usually kind of be a risk on sort of catalyst. All right, so I think overall right now, I want to also say we seem to have a positive feedback loop taking shape where basically you have a government shutdown and that leads to the potential for government job losses. That leads to potentially more rate cuts. It also leads to potentially the government not releasing any inflation data. So you could actually have a situation here where the government shutdown happens, but then at the same time, a lack of of inflation data actually could be potentially bullish on the market. Both of these conditions, rate cuts and no inflation data, could be viewed as positive for stocks. One of the points in our articles that I want to mention is that we could really be in that environment where the bad news is basically locked out. We have job losses, which make rate cuts more likely, and then we have no CPI data at all, so there's nothing to be scared of. And speaking of CPI, I think it's interesting that I've seen more evidence that, and I'm someone who has seen risk of inflation because of tariffs. And there is evidence of that. When you look at things like the Institute for Supply Management, you look into these different reports, there are signs out there of inflation going higher when you look at the price component in the manufacturing and the services data. However, there is also a lot of evidence that rents are coming down and home prices are coming down. And that is, more than a third of the CPI. And that could potentially create, a pull the other way. So I think we have to realize here again, everyone's worried about this one worst case scenario and then this other positive thing that people, oh, I forgot about that. Because remember, for years we've been talking about the base effect of rents stabilizing and moving lower and how that was going to be potentially a tailwind for stocks. And oh, we kind of forgot about that when we freaked out about tariffs. But guess what? Maybe that actually does come through. So I think that's another thing we have to realize has been a catalyst here. Um, so also interesting is last week, FactSet basically had a report and they said that earnings, let me actually find that, but FactSet, they said that third quarter earnings, the estimates from Wall Street actually rose during the third quarter. It's the first time that estimates have risen during the quarter since the end of 2021. So normally, if you're in the third quarter, the estimates actually start the quarter at one level, and normally by the end of the quarter they're lower, and then the numbers come out. So normally it's like lots of enthusiasm, then caution, and then companies beat. In this time it's interesting because we actually saw third quarter earnings estimates increase between the period of the end of, the beginning of July and the end of September. So I think that is also a surprising sort of positive that is popping up. So these things are under the surface, and one of the things we try and do in our S&P recap is we try and highlight those things for you guys, so you really see all the things that are out there beyond just the kind of big headlines that kind of dominate the news. There's a lot of deeper things, and we always focus on those. And that's one of the key things that we're trying to deliver for you guys. Now, I also want to point out another thing that was kind of interesting was JP Morgan put out a note today that was bullish on European stocks. Now, I don't have a good, I probably have to dig it up on TradingView to find it, but the key thing is, this is a global, we've talked about this. JP Morgan was basically saying that valuation European stocks are good. It's kind of interesting. Europe right now has a whole hot mess with their French political. I mean, it's ridiculous. I mean, the guy was prime minister for like a week or something. But the thing is that there could be a spot where, like, we've kind of reached max craziness, and then you look and you say, well, their economy is not crashing, and all the bad news might be priced in, and valuations are good, and that's basically what JP Morgan is saying about European stocks today. So I actually saw two names in that front I wanted to mention. I remember a few weeks ago we had talked about ArcelorMittal, which is basically the big steel company in Europe. We had talked about this, this forming this kind of potential for a breakout out of this, basing pattern, and now we see it up here, actually hitting its highest level today in over a decade. It's kind of interesting, MT. But another one I wanted to point out now that has not moved, that might be some interest, is UBS. Basically, trending higher, held the 50-day moving average, and it's kind of, has that first bounce. But again, want to just kind of point these things out because like I said, the global trade, I think, is substantive, and if we do believe that there's going to be more rate cuts and all that sort of stuff, one of the most kind of basic reactions to a dovish Fed is global stocks. And I think that even if everyone's focused on AI, there is something that people need to at least kind of know that this is happening, and know that a major bank like JP Morgan is putting a call like that out there. So a few things I did want to mention on the financial before I get the individual stocks is Goldman Sachs. Here we are, kind of holding the rising 21, the exponential moving average. JP Morgan has basically also very similar level, and Morgan Stanley, we did a TradingView idea today. TradingView ideas, you can see it right here. And then so Morgan Stanley, we also did some about Oracle. We'll get to that in a second, but Morgan Stanley I thought was interesting. Morgan Stanley, Goldman Sachs, JP Morgan, kind of the big three. They are all kind of holding here. And if you look, I mean, they're holding, above some levels from the beginning of the month. And if this was a market that was breaking down, names like, pullbacks like this would be potentially worrisome. But in a market that's drifting to new highs, names like this, pullbacks like this may be viewed as kind of opportunities. Now, metals are just really explosive. I want to show one metal stock here that is, maybe people want to look at. They probably don't know about. It's called Teck Resources. It's a Canadian copper producer. There's been an interesting kind of, move in copper recently. I want to just kind of point this one out TECK. It has, had this rally pullback continuation, but it is holding above this level here. And, this might be one where people see it kind of chopping and holding kind of between, around 43, maybe a little bit of a dip toward 42. But this is one here that, I mean, again, metals are really performing in this market. And I'm looking for things that may be of interest to people. Now, Meta, basically it pulled back more than we expected, but I think also we have to realize here is that basically, here's a weekly level. And at this point, from my view, this is an interesting candle we're seeing today in Meta. If you look at Meta and then you also look at Netflix. Now, I think the thing to remember about Netflix is, this company is becoming an increasingly global company. So it has that kind of global weak dollar thesis. And also, I mean, these things like this Elon Musk stuff, I mean, you can feel whatever you want about these sort of like, hot button issues. But I think the key thing ultimately is you're looking at, a company that has now basically gone nowhere since May, that has that global exposure. Their earnings have been, consistent, and they have a lot of underlying things here. And the chart overall is holding a weekly low. So from my perspective here, this is the sort of thing where things like Netflix and things like Meta are both potentially kind of at levels where people might revisit them. So I wanted to mention those. Another stock that is starting to kind of come back to life today is Arista Networks. Has this kind of basing pattern. So I want to mention this one. It's another kind of tech name. And then two others that I think are really interesting. And I'll be honest, I don't know what to make of them, but I have to just point out that the railroads, United Pacific, Union Pacific, and CSX, both of them are showing kind of signs of stabilizing after long periods of just kind of nothingness. I mean, these stocks have been just dead in the water for a long time. And sometimes these are the things that start to break out and surprise you because it's like, oh yeah, I forgot about the railroads. And then guess what? Well, so did everyone else. And then when they start running, well, there's no one who owns them. And then people start looking for them. So I want to kind of point this out because I just think it's interesting to see some of the price action in CSX and UNP. And I've seen things base out with patterns like this before. And I want to kind of point these out as something that might be starting to get some interest. One last thing that was interesting to me again was that there was a media report. I can't remember what it was, but it was in the last week or two. There was a report saying that we're going to have weak seasonal hiring, the lowest since 2009, according to Challenger Gray and Christmas. That's the seasonal hiring for holiday shopping. Retailers are going to do the least hiring since 2009. So again, that is, kind of consistent with the Fed being dovish. So now, as you turn to the individual indexes, I think what's important here, it's very interesting to look at the S&P because now we're getting to the weekly, and this is really what's interesting to me. We talked about this kind of ascending line, and we're breaking through the top of it. So as markets move higher, they often accelerate and get steeper. Now, look at this here. So basically, back here in the candle that was basically the last full week of September, we probed back near the low of the previous week. Then last week, we basically held the close of the previous week, and it was also pretty near the high of the preceding week. And here we are today, and what do? We basically test the close of last week, and we don't even go. I mean, we get close, but we don't even go red on the week. Basically, the close of last week was at 67.15, and then the low was 67.17. So we basically based out 2 to 3 points above the close of the previous week. So the market is finding support at higher levels and the uptrend is steepening. So I mean, go check out what Paul Tudor Jones said because this also is kind of consistent with that sort of thing. In fact, given that context, I'm going to move up this support line to the low here. I meant the low, the close from last week, which I said was 67. I'm sorry, 67.16. That's where I'm going to put it. Now, in this environment, this is the thing also in the indexes don't make significant moves, which is why people want to look to individual names. The cues here, I'm not even going to say much more about this because it's also in a similar sort of spot. From my view, this is something here where people probably are just going to look for this to extend. There's no, um, I mean, I'm not sure in the weekly chart as having the fact we have, confirmed breakout. I don't really see any levels that are that relevant. I mean, obviously last week's close of 6603, but that would require now at this point a drop of over 1%. So, I mean, I guess we could move up an old support level or just put a new line. But from my view here, this is something where um, the levels are not as important, and it's just now a question of does it extend, and how far does it really extend. Now the Dow also here, it's basically an inside week, and from my view here, this is something that is now setting up to potentially extend to new highs. The Russell also is at a spot where um, you know I think from my view, I did last week. My webinar was just kind of focused on the emerging markets versus small caps, and I think that's something people should kind of weigh as a kind of, if you're looking for that sort of that secondary trade, that thing that is not the big tech, and you're looking for what's going to really outperform. I think people should kind of balance those kind of opportunities. But again, here this has a confirmed breakout, and it has potential to extend to the upside. So from my view here, this is very much kind of consistent with at this point a potential breakout in the Russell. However, my view about this is that let's not forget about the 10-year Treasury yield, because this is actually something that if the 10-year Treasury yield does move much higher, this is going to be something. This now we're looking at the TNX, the 10-year Treasury yield. Is something that can weigh on the on the Russell. And I do think we have to realize that the 10-year Treasury yield, the last auctions were not great. We have an auction this week, I think on Wednesday. It's actually in the article here. I think it's a 10-year auction, which could be kind of important. So I mean, so we're gonna have tomorrow. We're gonna have Stephen Mirren and Michelle Bowman, who've been two of the more dovish people, and then there's going to be. I'm sorry, I don't have time to check the calendar. I should have. Anyway, I thought there was an auction this week. Nonetheless, there's also minutes from the Fed on Wednesday. All these things with the government shutdown, it's very unclear kind of about what are the catalysts that really matter. But from my perspective here, I think people have to realize we continue to see higher weekly lows on the 10-year on the yield, and this is something that is a potential risk to the Russell. And the key thing, though, is that people are not wanting to own, foreign investors are not wanting to own treasuries. That is also a potential a potential point in favor of something like emerging markets. So the materials here, actually, let me look at the dollar index. I want to point out two interesting things about the dollar index. First, there was the Japanese, I think it's the Liberal Democratic Party. They appointed, I think, the first woman prime minister in Japan. It might have been that, but regardless, she's considered, someone who wants to stimulate, lots of stimulus and spending. And so basically, what happened was the yen got hammered overnight, and then we had the French government kind of collapse, and that also hammered the euro. So what did it do? It created kind of a false rally in the dollar index. So I think right now, if you look at the dollar index, this move today with a lower high compared to the 25th of September, we actually have a setup here now where the dollar index is potentially, all the bullish news is potentially now priced in. It came off these lows, but when you really look at it, like I said, the Japanese thing and the French thing, those are kind of one-offs. And then we go back to, okay, Fed cutting rates. And I think ultimately that's important here. So from my view here, we are in a spot where we do maybe have this continued downward pressure in the dollar. And now that we've gone up and tested this trend line, and if we do fail to break it, as it looks like is happening, this could be some extension to the downside. So this is, I think, something people want to kind of continue to focus on. That is a dollar index. TNX, I did show you. Now, look on the daily chart of the bond ETF, the TLT. I mean, in my view here, I mean, this is actually something that people might want to view as a kind of a potential bearish flag that might be breaking here. On this is the price, so this is the opposite of yield. And when this goes down, yields go up. There's a TLT. From my perspective here, this is looking like a potential sort of, you know, false rally, kind of bearish flag in the context of a longer term downtrend. So, I mean, if that's the case, this thing has got space in the price to go down significantly. So, again, I still think that the yields remain an issue that's lingering out there in the background. Now, if we look at the XLB, the materials ETF, this is just kind of stuck. And as we've said, this has become kind of damaged, um, kind of very strange sector. It's weird to see metals flying and the materials not doing well. I think it's become a very strange sector, and it has a lot of strange kind of Chinese exposure that I think is getting appreciated. So from my view here, this is in a spot where when the market does weaken, this might be one that people really, target. So XLB, from my view here, is just stuck with risk of going down, of kind of probing down toward 86, the low from back over the summer. Now that was XLB, the communication XLC. Now this, however, we have said this has the consistently strongest weekly chart. This has Meta, this has Netflix. And anyway, here we are holding this high from back on September 2nd. So of all the charts we're seeing here, this one might be the one that is giving the deepest kind of pullback opportunity. Now remember, this is dominated by members of the NASDAQ, and to see the NASDAQ hitting highs, see things like Netflix and Meta trying to hold after some pullbacks. Also look at Alphabet. It's kind of, that's the weekly, but let me look at the daily here of Alphabet. It's also basically, kind of held that 21 day. So from my view here, the XLC might be the one that people kind of see as some opportunity here based on the weekly. XLC. XLE. This, I think we want to just kind of wait and see if we really do get a breakout. It's pulled back a little bit more than the level we had cited at 90. But at the same time, if we are in a spot of Japan stimulating and the Fed cutting and materials and emerging markets doing well, I mean, that might be an argument in favor of XLE here. So I think we have to see. This might have been the beginning of a more significant breakout. And at this point, I'm very agnostic on energy, and I want to kind of wait and see if we manage to get back above this trend line and potentially get back above 90, 92. We could see this actually start a more significant run. I think we just have to realize that there's a lot of uncertainty in it, with the situation with OPEC, but ultimately here, this is showing signs of trying to break out. XLF, also, just holding tight, moving sideways, a little inside weak here. From my view, this is something that doesn't have really any edge one way or the other. It may have, it does have the potential to accelerate higher, but at the same time, going into something like earnings, this one might take a dive before earnings, before it wants to turn around. So I don't really see much on the XLF that gives me much clarity. The industrials here are interesting. They've kind of reversed higher, and now they're trying to break out. Like I said, the things I said about the railroads and things like that. What's also interesting here is that the airlines have pulled back and are trying to kind of stabilize here now. And if the airlines want to extend, then that is something that can push. If they want to continue to the upside, that is something here where I think industrials here could break out. So I got to say, I'm looking here to see if industrials have that pattern that we often talk about, which is a new record weekly closing high. And let's see this week if they manage to close above that old close at 155. That would be really, in my opinion, the key thing. I'm going to change this number to 155. But 155 non-XLI, we are potentially sneaking toward that level, and that could trigger a new wave of bullishness in industrials. Technology XLK is very much like the Qs here. I think at this point, there's not much to really say about this chart aside from the fact that it is, holding above last week's high at this point, and it has essentially the potential for extension. XLP consumer staples, continue their trek back down towards 76 on the weekly. We've talked about this, and it's range bound and weak here. And so from my view here, XLP is kind of remaining in this range with still more risk down to the bottom of the range. XLRE real estate, also stuck in the range, and I continue to always note with this one that there is that risk of 10-year treasury yield moving higher and this dragging this thing lower. So this is stuck with the rest of the market running, and this might this might offer a good downside trade at some point. And I think we have to realize that this is, kind of think like a vulture. You see that animal dying in the desert, but it's not dead yet, and you're waiting for that moment to pounce. And I think that's kind of the way to think about something like these. They're not there now, but if we do see yields move higher for various reasons, this is one that could get hit. So this is on the watch list now, and struggling, but not really breaking yet. Now we talk about the breakout in utilities extending here, and from my view, as long as I'm going to move up, I'm going to actually move up this line, basically to last week's close. And I think again, this market is holding those highs. It's not pulling back to lows. And so I'm going to keep that line at 88.91. That's last week's close, and I think it's holding there, can sit for a few days and extend. It's exactly what we said with the S&P last week. We basically said it could probe down to I think 66.50. We said basically it can probe down to 66.50 right there. We were talking on Monday. We went down basically a little bit below that. It held that low, and it was also near a high, a weekly close from September 17th. It held and extended, and that's the kind of situation now with utilities. Right here, you can hold, chop. maybe go down near that the Friday close, sit, and then extend. So people looking for this might want to just look for some intraday probes back down toward 89 on the XLU. But I mean, this has got that whole data center theme that's going on. XLV. Now, this is, I think, also here something where people might want to. I mean, the level now that emerges for me on this one, I'm going to move this line up to here. So these were basically, I mean, it's roughly around, I'm going to move it a little lower. I'd say probably around one kind of 143 and a half. It was the low back at this week, the beginning of March, the first middle week of March. And I think that's probably a level here that we want to see if it can kind of hold, but it could sit here for a few days. And I think this is something to kind of wait and watch in something like the healthcare. But I think that what we see with this politically, and we've kind of seen this movie before, and I think people are going to have that view. And a lot of these are like companies like Eli Lilly and stuff that have been basically weak for months and months, and people might look for opportunities to come back to these names. Consumer discretionaries at this point also kind of inching toward new highs, and I think when you look at it, all this does is kind of consistent here with this accelerating off this level. And I think as we get toward Amazon earnings and everything else like that, this is something people might look for this to extend. We had that record weekly close, and it's basically confirmed. We tested it for multiple weeks and we're sitting here. So they look overall, I think the ones that maybe have the most potential from here to extend, what I would say would be communications and consumer discretionaries. Things like technology and the NASDAQ also have potential to extend, although they don't have the same kind of pullback. So they might have less opportunity. They might have more opportunity of just kind of stalling. And then things like industrials, we're watching for that weekly breakout. And then things like financials and materials are just kind of stuck in the range and drifting. So those are the main things that we wanted to talk about today. We'll see you on Thursday when we do market trends, 2 p.m. Eastern time on Thursday. Hope everyone has a great day, and I'll see you soon.